Well, I must say, first of all, it's great to be here. Thanks for the time. I'm in Kathy's world. VCs can be one of two creatures, and they're pretty binary. You're either a massive pessimist or a massive optimist. I'm a massive optimist. I heard one VC say the other day that it's an amazing time to be investing, but a terrible time to be an investor. And I think being an ex-founder that's become an investor, I'd say the same thing about founding a business. It's an amazing time to be founding a business, but a pretty tough time to be a founder. And what do I mean about those two things? Or what I mean is, look, it's an uncertain time, as we've heard. If you're a public market company, your valuations are crashing. That's bleeding down into early stage investing. Therefore, there is less money available than in a year ago. So that's a tough time to operate. You're having to make hard choices about your business. You're having to make sure you've got product market fit aligned. There is not free money around. Maybe your valuations aren't growing as fast, so you can't raise as much money. So that makes it a tough time. But at the same time, on the flip side, we're a 10-year business, right? Venture capital is the highest risk capital, investing at the very earliest stages of a founder's business and supporting young founders to build what we believe will change the world companies. And if you take it in that perspective, this is a truly unique moment that we haven't seen, even with COVID, which was a very unique moment and drove software and collaboration and Zoom, as we're seeing now, to ever greater heights. What we're seeing now is a 20-year moment. The combination of a change in the world order, the energy transformation, the climate transformation. These have all been things that have been coming, but now we've hit a point where enough is enough. Our back's against the wall, and the way to solve this is through innovation, through new technologies. And what we're seeing, therefore, is founders, 6 out of every 10 founders that we see are building businesses to solve these huge long-term problems, which come new materials, new energy sources, new computing sources, new solutions to replacing petrochemicals in every part of our supply chain, new energy sources. These are going to be the next 10, $100 billion businesses of the future, and they're being started right now.
Ali,
and that makes it a very exciting time.
Ali, over the last few years, you've had investors not wanting to miss out. If they wanted to be involved in a space, then they'd place bets on all the major players in that space so they wouldn't miss out. Has that changed now? Is the sector really having to do its due diligence and pick one particular player and have conviction?
Yeah, it's what happened before is FOMO, fear of missing out, and rising tide lifts all ships, right? Everyone did well, made it very competitive, and everyone was wanting investing. So a lot of good businesses get funded, but a lot of bad businesses get funded. Now it's bifurcated. The winners win very big, but it's tough if you're in the middle, and then you have the very early stage guys. So yeah, I think that's good, right? It's good for quality, it's good for investing, and what it places a premium on is investors and founders that have a good partnership, investors that are experienced and active, and private equity and venture capital is a great place for that. It's long-term, patient capital, it's experienced, you're adding support around the board, you're not at the whim of your next quarter, you're building for the future. And I think that's why, again, for investors like us, it's a very exciting time. And when I was a founder in these periods in the last financial crisis, this is exactly what you look for in an investor.